Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.
This week on Wall Street Wrap-Up, a shakeup at the House of Mouse. CEO Bob Chapek has been fired immediately and replaced by retiring Disney CEO Bob Iger. And if you're flying this weekend, make sure to pack some patience because airlines report that air travel has reached its pre-pandemic levels. And the fallout from FTX continues as the cryptocurrency exchange heads to bankruptcy court in Delaware. But Sam Bankman-Fried, he's staying in the Bahamas. I'm Andre Laborde. We've got these stories and more. It's Friday, and that means it's time for Wall Street Wrap-Up. Hi, I'm Andre Laborde. Welcome to Wall Street Wrap-Up on this Friday, November the 25th. I hope you had a wonderful Thanksgiving and a good week as well. Well, coming up tonight, also because today is Black Friday, we're going to be talking with Dana Telsey. Now, Dana is the founder and CEO of the Telsey Advisory Group. We had talked to Dana a couple of weeks ago about sales for this weekend and Cyber Monday and what type of holiday sales our department stores going to be offering. And she'll be with us in a moment. But first, if you're traveling this weekend, I hope you pack some patience. Thanksgiving is considered the busiest weekend for travel. Any airlines. In fact, an 8% increase is expected for those taking flight to be with loved ones this weekend. Now, that equates to about 4.5 million passengers for the weekend traveling either in the air or at the airports. Well, this increase is back to pre-COVID levels. And as you can see, as the lockdown started in 2020, there's been a steady increase of airport traffic year over year. Well, this year's Thanksgiving travel is pretty much exactly where it was prior to the lockdowns. And all the airlines and travel sectors are experiencing increases in travel and traffic, with United Airlines reporting higher numbers with a 26% increase from pre-COVID levels. And more fallout this week from FTX as the collapse of the cryptocurrency exchange and its founder and one-time CEO, Sam Bankman-Fried, as the lawyers descended on Delaware's bankruptcy court to settle claims and see just how much money is actually remaining. Of that possible 1 million creditors that had deposits or are owed money by FTX, the top 50 alone were owed over $3 billion. And of the top 10, they've lost almost $1.5 billion from the bankrupt exchange. Well, though the names of these people are redacted at this time, the amounts owed ranges anywhere from $10,000 to $200 million. And as of Wednesday's close of business, Disney leads all the Dow Jones stocks. Oil and energy stocks were the only laggards for the markets. And as of the close of business on Wednesday, the Dow Jones ended the week at 34,195. That was up 1.3% for the week. And the S&P 500, they closed at 4,027, and that was up 1.5% for the week. And as of the close of Wednesday, the NASDAQ ended at 11,285, up 1.25% for the week. Now, Dana Telsey, she's been named Barron's Magazine as one of the 100 most influential women in finance, and she's been ranked #1 specialty store analyst for 7 consecutive years, and she's here with us tonight. Hi, Dana. Welcome to Wall Street Wrap-Up.
Thank you so much for having me tonight. Really glad to be here and talk about the upcoming season.
It's just a couple of days away. Halloween's going to be over with. And normally, at one time, it was used to be after Thanksgiving. Now it's after Halloween. People are going to be gearing up. And I'm thinking of the consumer, not so much the retailer. The consumer is now going to be gearing up for the holiday season. Do you think with the fear of what we've been hearing about of recession and inflation, do you think the consumer is going to be wanting to part with their money as they have been in the last couple of years?
I think consumers are going to be very cautious over this holiday season. But keep in mind, the level of promotions that are going to be out there is going to be super high, given the amount of excess inventory that all different types of retailers are carrying, from discounters like Walmart and Target to specialty retailers like Old Navy. Consumers are going to have their choice because of the deals. As a result, we're hearing of more consumers starting earlier, I think you're going to have a Black Friday that still is very competitive, although stores will not be open on Thanksgiving Day. And if anything, you've got digital and physical. And the fact that this year consumers are going to be able to gather, they're going to spend carefully, but they'll still spend. And keep in mind that a lot of the forecasts for the holiday season this year, they include inflation. If you X out inflation, frankly, it's going to be basically a flattish holiday. With inflation, we should be up at least mid-single digits.
So when it comes to discounts, do you think that there will be more numerous discounts than they've had in the last couple of years?
I think the discounts will be definitely higher than they were last year. I think they'll be more likely similar to 2019. And I think the amount of markdowns are going to be voluminous at many of the different retailers. Everyone is working to move inventory, particularly in the apparel space. But I think we have something else that's competing. We have experience. And today, I think for this holiday season, we're going to see more families and more friends have social occasions, dinners, and celebrate together. So the competition for the dollar is fiercer today than it was in last year in particular, and therefore promotions are going to be necessary in order to drive conversion.
Probably they won't be having like for lack of a term, a Black Friday on Thursday, Thanksgiving that day before. But do you think that they will have, for lack of a better name, like that following Monday or that Saturday or the Wednesday before? I guess I'm trying to get a figure out if they've got so much now to discount and they may not be able to have it all on that Friday. What days will they be putting those big discounts?
So some of the discounts are already beginning to start, but definitely the beginning of the week. I mean, for some, it's Black Friday week. Cyber Monday can continue some of the big discounts from Black Friday itself. But overall, I think Black Friday is always something special. There's always a nudge that companies do in order to promote and to drive traffic. I think overall, we're going to see the level of discounts probably the most on Black Friday and then followed by Cyber Monday. And if you really look out, the Saturday before Christmas, and this year with Christmas being on a Sunday, that Saturday before Christmas will be a huge day.
You know, thinking about for people like me who always buy stuff on that Christmas Eve, I think that Saturday, you're right, is going to be mobbed. I'm curious about smaller retailers. I'm not thinking about the Macy's or the Targets or the other type of Marshall Taylor store, but I'm talking about the small mom and pop store. With so many discounts and such, will small retailers be able to survive with all those discounts?
If small retailers got through the pandemic, they certainly are able to survive this holiday season. How do they differentiate themselves? It's by events, it's by customization, it's personalization, and most of all, it's service. You're seeing a big constituency out there wanting to support local. Go local is very important. Remember, we also have a Saturday during the holiday season that's dedicated to local retailers. So I think in the ethos of whether it's to support local, whether it's sustainability, whether it's to be able to capture those independent retailers and make them thrive, they are going to have a bigger voice this year.
Visa came out with their third quarter earnings, as well as other companies as well too, but where others were down, Visa was strong and expanded their customer base because of the fact that that credit card shopping was so good in the third quarter. Do you think that this is a good sign of credit card usage will be good for the fourth quarter and the holiday season?
Well, it is interesting exactly what you just mentioned. We have seen the credit card companies like the Visas of the world and MasterCards holding up in terms of the consumer health. While certainly the growth rate may have moderated a little bit, it certainly still is healthy. And it's something that we're watching closely. Keep in mind the bifurcation is really distinguished by income level. And what we're seeing is the lower income consumer, those with average annual incomes of $50,000 and lower, are really those pulling back. So the health of the credit card customer, typically they're a little bit higher income, and you would expect them to remain a bit healthier.
This week also, I think it was Amazon that announced that they're going to be taking in Venmo payments. And I know that's just going to be another area that a consumer will be able to use to purchase their items. Do you think that's going to show on their bottom line that it'll be having that much of an effect with Amazon?
Overall, when we've seen even buy now, pay later options or the all different payment transaction types, each of them is always an additive. What we've noticed is that certainly with new payment transaction types, the millennial consumer is attached to them first. So I think that helps to drive conversion, build awareness, capture new customers.
What about big ticket items? You know, we're talking about the different types of things that retailers will be offering discounts, but you've also got the big ticket items, and I'm just thinking of, let's say, consumer electronics, or we're talking about handbags, the Dolce Gabbana, or I'm talking out of my area here when it's certain types of apparel. Will these be still big ticket items that would be purchased this year as compared in the previous years?
One of the things we've seen on the luxury companies that reported their results last week, certainly the area of handbags has proven to be very stable and showing continued growth. We may not see the level of price increases in luxury handbags that we've seen in the past, but you're certainly seeing the demand. Electronics is always looked at as a big ticket item for holiday that's promoted. So if you want to get a deal on consumer electronics, I always think that Black Friday is an opportune time.
So they'll be having some great deals this Black Friday for
I think you'll see that in electronics. I don't think you're going to see that in the luxury space.
We had about maybe 5 months ago, 6 months ago, Larry Storch on, and Larry, who was with Target and also Macy's and such, and he was saying that retailers have to usually, for the Christmas season, purchase. The buyers have to purchase sometimes 6-7 months beforehand. So if Christmas is in December, you're looking at probably, I imagine, June, July, or May when the buyers are having to purchase. With things changing so fast, so rapidly with the economy, how hard is it for buyers right now to figure what a consumer will want a half a year in the future?
One of the things that we're seeing is lead times in terms of making those purchases. Everyone's trying to get them shorter and narrower in order to be able to adapt to what the consumer wants. With the supply chain disruptions that happened over the past year, it's proven to be very difficult. We've already seen the arrival of goods at different seasons and that's why you're seeing some of these high level of promotions. It's a challenge, but one of the new elements of what retailers are using, and manufacturers too, is data. Everyone is more informed than what they've been in the past, and frankly, the digital landscape helps to keep them up to date. So watching carefully, but the order patterns, definitely the lead times still need to be shortened.
Well, with supply, as you were mentioning, with supply chain disruptions, I would assume that many of the goods that are purchased in the United States during this holiday Christmas season may come from, whether it be Europe or whether it comes from China. So with transportation, what type are they? Is places like the Port of Los Angeles getting a lot better in shipping than they were 3 to 4 months ago? And rail, I mean, I'm thinking also, Dana, is that I understand that there's a possibility, and I hope it doesn't occur, but there may be a rail strike coming up in about a month or so, that the union workers are not happy with that. What type of these problems or potential problems may this affect the season?
I think overall, you've seen a lot of companies receive their holiday merchandise already. Mm-hmm. There's also been a shift in where they're bringing in goods. The Port of Los Angeles has been the most challenging during the negotiations, and frankly, many companies rerouted their arrival of goods to some of the East Coast ports. Others are using drop ship measures, and obviously we've seen others use air freight. So definitely strikes, and what changes, retailers are prepared for that, and they've already set aside alternate plans in order to ensure that they have the goods in stock. And with the abundance of goods that you have this year, I think it's more a factor of how do we get rid of it instead of how do we get it.
I think FedEx has said that they're going to be raising, either have or going to be raising prices. I'm assuming UPS is going to be right in line as well too. Does the retailer probably eat that cost, or will it just be passed on?
One of the things is that many retailers, particularly those of a larger size, some of them have their own trucking mechanisms. Others, basically, they negotiate contracts. So whatever the price is happening now, it may come into fruition later on. But you never want to see, in terms of the headwinds of cost pressures, I mean, this year we should get a little bit of a tailwind in terms of lower freight expense. The headwind that we hear most of all the time continues to be labor. Labor costs are rising, and there is not enough labor, which is definitely a headwind to whether it's retailers or restaurants, and even fulfillment with distribution.
Do you think with labor and holiday retailers wanting to hire for the Christmas season, I would assume that would they start like right after Thanksgiving? Would this be something that they would try to start putting in place right after Halloween? When are they going to be starting this holiday season of hiring?
So they've already been out there hiring. They've already done the interviews. We've already had many companies put out there the number of people they're planning to hire for the holiday season. And I think some of it is starting already, given the fact that you head into Halloween and then there's training that needs to be done also.
True.
So that's why I think of it as a fourth quarter phenomenon with the interviewing and hiring in the third quarter.
So are you getting a feel from retailers that they're not getting the kind of labor that they're wanting? Because you can have somebody in that spot, but having somebody of just being able to converse with the client, with the customer, of, you know, that repartee that is so important in purchasing.
So what I've been hearing about is the fact that certainly your full-time employees are the most conversant in whether it's systems or whether it's your assortment and what a customer is looking for. You have your part-time or seasonal help that is used to fill in some of the busiest areas. And the training of those employees typically shouldn't take that long. We have seen a lot of companies either hold their holiday hiring flat with last year or down to last year. We're not seeing hardly any companies uptick the number of hires for holiday that they had compared to last year.
Well, I would assume, and correct me if I'm wrong, but I would assume that because of labor this year, they'll have it to pay more this year for labor than they have in past years. That means that those prices will have to be passed on to the consumer through the items that they charge. Would that be correct?
We've seen some of that already. We've seen prices of items go up as we went through 2022. Now with the abundance of inventory, prices are coming down. The offset is the reduction that companies are seeing in air freight and ocean freight rates. But the volume of goods, there's nothing like better than expected sales in order to leverage your expenses.
What about, Dana, when we were locked down with the pandemic, a lot of people couldn't get out of their homes. So internet buying was very popular and expanding. I'm thinking of like Amazon, Wayfair, and such. But now that people are able to get out, are the brick and mortar stores starting to see, or will they see a larger percentage of consumer buying? Or now that people have already gotten to maybe know and like internet buying, that will be more expansive? Your thoughts?
What we're seeing is that traffic is returning to stores. The social engagement of going to a store with your friend, your brother, your sister is of appeal to people. So we're seeing that coupled with the fact that ease and convenience matters. And being able to return items to a store is easy, and in many instances it can be convenient. But the other thing it does is it drives an attachment sale. So as a result, one of the things that we're seeing traffic pick up while digital sales growth is moderating, but still certainly is important. You need both. It's not an either or.
We're really happy to have Dana Telsey. Dana is the founder and the CEO of the Telsey Advisory Group. We're going to take a break. We'll be right back. If you're just joining us, we're talking with Dana Telsey. Dana is the founder and CEO of the Telsey Advisory Group. I have a friend of mine, and she's got a little dress shop. And she said one of the problems that she's been having is that, because it's a dress shop, her clientele would be women. They would be coming in and try a dress on and find the color they like, the size, the brand name and such, then hang it back up, and she knows they go and buy it online. Is that is that an isolated experience, or now with online shopping, are more and more retailers complaining about that?
We've been hearing of that since online happened. And frankly, that's why being able to engage the store, knowing your customer, where they're located, the zip code, you can basically parse together in terms of who's the community that you're serving. But yes, you are saying that, are they going in the store and then shopping online for it? But one of the things you're also saying is sales associates today, when they're helping a consumer and say, can I order online for you? You're seeing that happen too. And that's why we call it the multi-channel experience.
I read where Toys R Us, that was normally a standalone store, and then they went out of business. Well, I've been reading where now they're going to be coming back, but inside the malls this time.
Well, now Toys R Us is being located inside of Macy's. It does two things. Frankly, it diversifies the assortment that Macy's is carrying, plus the fact it gives Toys R Us an ability to manage their square footage and get the benefit of the traffic that goes through Macy's and the location. I think it's a win-win for both. It's a cost-efficient way for Toys R Us to work to revive the brand while being a category expander for Macy's and attracting more customers.
You know, Dana, I agree with you. I thought when I first heard this, my first thought was, and I'm glad you brought that up about Macy's, because the foot traffic you get in a mall or at a Macy's is much greater as compared to when a Toys R Us used to be a standalone business. Normally, it was always a huge piece of property. So you would park in a giant parking lot, and you have to be specifically going to Toys R Us. But I would assume you're right, that with the foot traffic that they would be generating, it would be much more advantageous, you know, for there.
Exactly.
What about now? I had heard that the reason why Toys R Us, one of the problems that they were having before, was that the cost of the toys could be, the consumer could get a cheaper cost at, say, Amazon.com. Would they be able to adjust their prices to be able to be more competitive with an Amazon.com?
I think it's not just price, it's about assortment. I think the differentiation in assortment that Amazon carries compared to a Toys R Us, I think that's going to be one of the elements that makes them fully differentiated. Price definitely matters, but assortment matters too. Because when your child wants something, you want to give them that special gift for holiday.
Sure. How about companies? And I'm thinking of companies like Adidas and Nike and The Gap. Many times they have celebrities such as either athletes or rap stars for their brand of items. And I'm thinking right now this week, Kanye West with The Gap and also with Adidas. Well, I don't know how, like, let's say their sales are projected on X amount of the sales of a Kanye West or of a basketball star, Stephen Curry, or whatever it may be. Athletes and many times rap stars sometimes are not thinking when it comes to marketing of opening their mouth and having the wrong things come out. Will companies like Nike or Adidas or The Gap or others, will they have to rethink their partnerships with different types of celebrities like that?
I think partnerships and collaborations have proven to be very fruitful for many brands and retailers. I think partnering with the person who reflects your DNA, how you feel about your brand, who your community of customers are, can certainly help to expand the awareness. But as we all know, it can be damaging if the celebrity or icon all of a sudden shifts their views. I think it's something that needs to be constantly talked about with the icon and make sure they're part of your brand ethos in order to matter, because it's your community that matters most. And when you think about a brand has to say what it does and do what it says. That's why people belong to the so-called club of the brand.
Dana, I'm curious about, what about insurance? Do retailers, you were talking earlier about supply chain disruptions or slowdowns and such. Do retailers purchase insurance to make sure that either A, their products get there on time, and also it's not damaged on the route to it? What type of a guarantee do retailers have that because they won't have time to reorder something if the product comes out defective?
There's never a full guarantee. And that's why one of the things retailers do, they diversify their supply chain, they diversify their manufacturing base. When you think about last year when Vietnam had all the issues with COVID and they shut down, people were all of a sudden, are you in China? Are you in South America? Where are you diversifying your sourcing so that if there is a tragedy or something that strikes, you are able to keep your supply chain and assortment going in order to continue to drive conversion. Nothing's guaranteed, but diversification helps to ensure availability of goods.
Dana, I certainly thank you for coming. It's been a lot of fun and very educational for me as far as this Christmas season. I hope you come back.
Thank you so much. Have a wonderful holiday, and I love to talk again.
Thanks, Dana. Well, if you've got a question about finance or a comment about the show, we'd love to hear from you. Make it pithy, make it concise, and write us at andre@wallstreetwrapup.info. And now for a look ahead for market information for next week. But first, when was the first automobile race in the United States? We've got the answer in a moment. When was the first automobile race in the United States? 1895. 6 vehicles raced from Chicago to Evanston, Illinois. It took the winner 10 hours to complete the race, and the average speed was just over 7 miles per hour. I think 7 miles an hour is about the same speed today with rush hour traffic. Well, the month of December is basically right around the corner, and so is a possible railroad strike. The type of goods transported by rail range anywhere from chemicals such as chlorine to sanitizing our drinking water to fertilizer for farming. And as of December 1st, which is next Thursday, whatever chemicals are on the rails at the time, they will not be taking any more due to the possible rail strike. Now, for those who enjoy turning the lights on, coal provides 20% of all electricity, and railroads supply 70% of all the U.S. coal during the winter months in the Northeast. Coal and natural gas is heavily used for heating our homes. All 12 unions have to ratify whether to strike or to continue working. Now, presently, 8 of the 12 unions have ratified the new contract, but 4 unions are still holding out. Now, under the Commerce Clause of the Constitution, it's Congress that decides, and the President signs off on legislation. About this, Congress comes back this Monday and Tuesday for both the Senate and the House. But 1 week from this Thursday, December the 8th, is the last day of the status quo of the rails working, and as of now, 2 weeks from today, Friday, December the 9th, the strike begins. Well, as a reminder, we repeat the show on Sunday mornings. Best way, though, set your DVR so you'll never miss an episode. And that's our show for this Friday, November the 25th, Black Friday 2022. I hope you enjoyed it. My thanks so much to Dana Telsey for joining us this evening. But as always, it's you. We appreciate you for allowing us into your homes tonight. Always remember, follow us on all the social media, Facebook, YouTube, Twitter, and WYES.org. So enjoy your Thanksgiving weekend, what's left. Have a productive week as well. I'll see you next week. Whether it's Black Friday or any Friday, it's Wall Street Wrap Up. I'm Andre Laborde. Remember, money never sleeps. Good night.
Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.